Hi everybody, this is Scott Dudley from SaaS Startup Stories, and today my special guest is Jack McColl, who's based in California. Jack is the founder of Credit Stacking, and he helps entrepreneurs increase their credit limit to help scale their businesses with borrowed money. Welcome to the show, Jack. You ready to rock and roll?
Of course, man. I'm happy to be here. Thanks for having me.
Excellent. Looking forward to it. All right, so let's start off with your background and what initially got you interested in using finance to your advantage.
Yeah, so when I graduated college at University of Washington in the States, I really jumped right into business. I found different products that I can sell, and at that time, I had no credit. I wasn't able to borrow money. The only way I was able to finance businesses was from the hard-earned money that I saved up. And so, for business in those earlier years, it was very hard to scale. And I was always wondering, how people got so successful and scaled their business so quick. And over time and through business experience, I realized people would borrow money for free to help scale their businesses. And so that opened my eyes to see what's possible when you can, leverage debt to help you scale. And so I didn't really take advantage of business credit until my third or fourth business venture. But when I did, it was a night and day difference on how fast we could scale and basically having a higher percent chance of succeeding. So I'm the biggest advocate of the more you can borrow, the more you can make. And so I fell in love with business credit, borrowing money at low interest, and then using that money to accelerate different investments and different business ventures.
Okay, interesting. All right, so tell me a bit about credit stacking and how it helps entrepreneurs increase their credit limit to help scale their businesses.
Yeah, what I do specifically is I teach people on how to optimize their personal credit to make themselves attractive to banks. And when someone's attracted to the banks, they're going to get approved for the best business cards with the highest limits. And then often these are 0% interest cards, which is 0% interest for the introductory period. That can be 6 months, 12 months, 18 months. And so when you can borrow, tens, if not hundreds of thousands of dollars, you can then use that money to scale your business or start a business or invest into other people's businesses. And so, what I teach, all my students is like, how to become attractive and how to get approved for these top cards. So on this podcast right here, I want to make sure I provided tons of free value and give people actionable steps on what they can do to get started building.
Sounds great. All right, so maybe if you can start off sort of explaining the basics of your credit curriculum and how your system actually works.
Yeah, so the very first thing anyone should do before applying for new cards and getting approved for more credit is the awareness. So you want to check your credit score. You want to check what your credit file looks like, because that's what the bank is going to look at when you're applying for a different credit, right? So it's step one's always awareness, figuring out where you are right now. What does your credit look like? And then once you know that, then it's all about optimizing your personal credit. And that consists of just building relationships with top lenders, keeping your utilization down on the personal cards, adding more personal cards to build relationships with these key lenders. And that is the personal credit is going to be your foundation for business credit cards. And the big difference between personal business cards and business personal credit cards and business credit cards is the business cards don't report to your personal credit. And so this allows you to use all of the money you borrow on the business cards, and it won't affect your utilization, which won't affect your score whatsoever. So an example, like if you have a $20,000 personal card and you spend that full $20,000 and leave a balance, that's going to be full utilization. But if you have a $20,000 on the business side, you can spend that money, leave a balance, invest it somewhere, and it won't negatively affect your score. And so just this last year, I was approved for $300,000 in credit card balances, and I'm maintaining over an 800 FICO score, which is a very high score. And I'm able to do that because most of it's on the business side.
Okay. Yeah, I'm a bit of a novice in this sort of topic, but can people just go online and find their credit score a lot easily, or is there like a special way to do it? Or
yeah, there's different credit monitoring services. A couple of the big ones is myfico.com, identityiq.com. There's also some other free options, which gives you a good understanding of what your credit looks like. But that's always step one, is figure out, where are you right now, and then making a plan.
So there'd be like different websites, so for someone like me in Australia to someone in the US, or is it pretty much the same globally?
I mean, I think it will differ from country to
Yeah.
country.
Okay.
So, find your equivalent, find your equivalent of your credit file, understand what that looks like. And then it's all about, reverse engineering the
Yeah.
factors that make up your score. And just, understanding how to optimize each of those factors that increases your score and makes yourself more attractive to banks.
Yeah, absolutely. Okay. So I'm a bit of a Robert Kiyosaki fan. So I'm just sort of wondering, do you believe in the general wisdom about the differences between good debt and bad debt? I mean, he talks about that all the time. And can you explain your own perception about it from a business viewpoint?
Absolutely. I'm also a big fan of Robert Kiyosaki. I think there's a major difference between good debt and bad debt. And I
Yeah.
think a lot of people don't understand that difference. When they think debt, it's like all debt is bad. But
Yeah.
no, good debt is very good. And what good debt is using money that you're borrowing into things that are appreciating or going to cash flow you money, right? And on the other side, you have bad debt, which is using borrowed money into things that are depreciating or are costing you money, right? So good debt can help you accelerate where bad debt is going to drag you down. So huge difference. And if you use debt to your advantage, it is a major game-changing tool in business. I think the night and day difference of being successful in business, in my opinion.
Yeah, and it provides that leverage that he talks about as well, which is sort of what you were explaining earlier, isn't it?
Yeah. I think the more money you have, the faster you can scale. And generally, the faster you can scale something, the higher chance you are going to be successful. Because you obviously have your overhead. So the faster you can scale and decrease those overhead expenses, the bigger your margins are going to be. So I think having more is so much more beneficial, especially when you can borrow it for free through 0% interest
Yeah,
business cards.
absolutely. Yeah, for sure. All right. So for someone that doesn't know much about credit, sort of, can we go back to the credit score topic and maybe talk a little bit about how the credit score works in sort of simple terms?
Yeah, so the two biggest factors of your credit score is your utilization and your payment history. So payment history is 35% of your score, which is it's massive, right? So you never want to miss a payment. You want to have as many on-time payments as possible. And when you have credit accounts open, you never want to close them because if you close your credit accounts, you're deleting that history from your credit file. So it's always beneficial to keep the accounts open to maintain that on-time payment history. Back to utilization is the amount of the debt that you're using, your utilization. So if you're using all of the debt that's being lent to you, you look risky. And so you want to keep that, at least in the States, under 30% on every single account. Ideally under 10 is the sweet spot.
Yeah.
But that's where the big difference between the personal credit cards and the business cards come in, because the personal cards, the banks can see your utilization level. But on a business card, because they don't report to your personal credit, the banks can't see your utilization level. So if you go to, say, for example, Bank One, they give you $40,000 on a 0% interest card, you max that out. And then you go to Bank Two can't see what Bank One just lent you on the business side because that card's not reporting to your personal credit. So that's why it's key to keep your personal utilization down. And then that gives you flexibility to get approved for business cards. And then once you have the business cards, you can use those full balances and invest in your business or other people's businesses.
Okay. Yeah, that's probably one of the mistakes that I've made because I've cancelled a lot of credit cards. Sort of basically didn't want to pay the annual fee, and I don't know. I've got a little bit of thing about using credit cards, but I sort of see what you're saying. If you're better off just not using them and keeping them open, because otherwise you get penalised for it.
Totally. Yeah, it makes a lot of sense to keep them open. Even if you have a card that has an annual fee, you can call them and ask them to downgrade you to a similar card that doesn't have the annual fee, but it'll still keep the account open.
Okay, interesting. Never thought of it that way.
Yeah.
All right. So sort of getting back to the SaaS sort of topic, at what stage of a SaaS business life would you say it's the best time to apply for finance, and how would a founder go about ensuring they get a good deal?
Yeah, I mean, I think it always makes sense to build your credit and get approved for more money. Maybe you don't need the money today, but at least you want to be in a position where if you need the money, you have confidence in yourself and your credit file where you can get approved for tons of money, right? So it's all about preparation, and preparing yourself takes quite a bit of time, to build strong credit. So you always want to be building, and by the time you need the money, at least you have the access to it. So I think any person in business should be building their credit, because I think having more money in business can really help you grow. So it always is beneficial to build and just prepare yourself so you're financially in a stronger position.
All right, but sort of at what stage would you say that they should actually take the plunge and borrow? Like right at the beginning, or once they've like validated an idea, or do you know what I mean? Sort of.
Okay, yeah.
So I mean, smart time to do it. Yeah.
So I mean, when you finance a business, there's 4 ways to do it, in my opinion. The first way is just to use your hard-earned cash, which I don't think is a good option, because I think hard-earned cash should be invested into long-term investments like real estate, cryptocurrency, stock market, things like that, long-term. Second option is to bring on an equity partner. So you bring on a partner, he brings the money, you give him equity. That can work, but then you're giving away equity, giving away control. The third way is to just do a normal business loan, which normal business loans are very high interest, which can work. But when you look at the fourth option, which is funding a business with 0% interest business credit cards, that's my favorite, because you're borrowing for free, you're not giving away any equity, and if you have strong credit, you can get approved for hundreds of thousands of dollars in a very short period of time. So that's my favorite. I think even if you have an idea, you've already started the business, you're looking to scale your business, I think it always makes more sense to at least have the access to the money. That's the big thing, having the access to the money.
Yeah. So I'm just sort of curious, so you might have already covered this, but how did you actually come across these cards in the first place? Like, did you see someone that was doing it, or how did you find out about it?
Yeah, I mean, I've talked to a lot of very successful business owners and pick their brains, listen to tons of different podcasts, read tons of different books. And it was, even reading Robert Kiyosaki's book, or, studying Donald Trump on how, such empires they have built. And it's all based on debt. It's all based on borrowing low interest money and then using that to scale. And then I found the easiest way to do that is just by business credit cards. And that's where I fell in love with it. I started, applying for tons, learning, see what worked, see what didn't work. I started giving recommendations to other people. And then once I had more data points to see what was really working, what wasn't, that really accelerated my know-how on this topic.
All right. So have you got any horror stories? Sort of, I'm wondering, what was the biggest challenge you've had to face with borrowing money where things didn't work out as expected? And how did you overcome it? I mean, I'm sure that not every sort of card that you've bought has worked out the way you expected.
Yeah, I mean, so the worst case scenario is for the debt that you can't pay back for some reason, has to go to collections, right? So one thing you can do, say, for example, you have a $20,000 card, you invested it, that investment went bad, you can't pay it back. You can balance transfer the debt from the top tier bank to now a regional bank. And then that now pushes it one layer farther and gives you more 0% interest timeframe. If you still can't pay it back after that second introductory offer, you can balance transfer it again to a smaller bank. Okay. And then the worst case scenario, if you still can't pay it off, one, you're burning the bridge with the smaller bank, not the top tier bank.
Okay.
And then two, it can go to collections. And at that point, through the credit repair process, which in the States, it's very protecting to consumers. And there's tons of different flaws in all the systems. So you can just, if you point the flaws out, there's easy ways to get debt removed from your credit file. Obviously, that's the worst case scenario, and we don't want to go there. Yeah. But that alternative is, in my opinion, so much more favorable than using your own money. Because if your own money is gone, it's gone forever. So when you have that alternative, I choose that alternative every day.
Yeah. Plus, obviously, you work hard for that money as well, if it's your own money. So, yeah.
Exactly.
Yeah. Okay. What would you say the most common mistakes that inexperienced SaaS founders make, in your opinion?
I mean, I think it's, when people are applying for credit and getting approved or trying to get approved for more money, I think it's a lack of awareness and a lack of a plan. And I don't blame people, because financial education in terms of, credit cards, honestly, most financial education isn't taught in general school where that kind of stuff should be taught. So I don't blame people for not having a plan and not knowing what to do. But the biggest mistake is not researching and not learning from someone who has done it so they can execute it in the best way possible without making mistakes. Because I think there's such a massive opportunity cost by not having something sooner than later. So if you can, if you can work with someone that has the know-how to teach you on how to, get approved for tons of money, so you can use that to scale, invest, things like that, versus do it yourself and, learn that over years, it makes so much more sense to, get that done now so you can get that money and use it. But I think when people don't have a plan and don't do their research, that's the biggest flaw. And I think that, as I said before, the foundation of all of this is your personal credit. So, it's crucial that foundation is built out with multiple cards, really, really good on-time payment history, and, solid relationships with the banks.
Okay, makes sense. So what sort of people do you work with? Like, is there a certain people that qualify, certain people that don't? Who would you want to contact you?
Business owners, people that have an idea that they want to start a business, or someone that has a business and they're looking to scale. Basically, any business owner, I can help dramatically by getting them access to more money. And it's something I haven't even talked about, but the travel benefits that come with credit cards are absolutely incredible. I've been traveling full time, often in very nice luxury for the last year and a half. And I do this all through the points and the cashback benefits I receive from these credit cards. So anyone that loves to travel and has a business, those are the people that get the most value of working with someone like myself.
Is it just US residents or is it global?
It's global, mainly US residents, because these strategies are directly with like the US banks. However, the strategies are somewhat similar. It's there's technicalities that are aimed towards the US, but the strategies in general can be applicable to any country. And American Express is global, so that's a big one.
So you do have some clients that are international, do you?
Yes.
Okay, interesting. All right, so here's a good one. What's your favorite business book?
Business book. Funny you ask. When you Robert Kiyosaki, Why the Rich Are Getting Richer. That book that impacted me so much. Just understanding the four quadrants of having, I forget the quadrants, but the big goal was to get as a business owner or investor, and you do that by investing, right? And I think the best way to invest is to get access to more money and use that money to invest. So that book was massive for me. So it was Why the Rich Are Getting Richer by Robert Kiyosaki.
Cool. Yeah. So his main concept is moving from the left side of the quadrant to the right side of the quadrant, because that's where all the leverage is. And yeah, that's where borrowing money comes into play. So nice. All right. So what are you curious about or researching right now regarding finance and credit?
I'm just trying to research how to get more. I've got approved for hundreds of thousands of dollars, but I'm trying to crack the code on how to get millions of dollars for very low interest rate.
Okay, it probably is possible. It's just a matter of finding it. Yeah.
Exactly.
Nice. Okay. All right. So where can people go to find out more about credit stacking and your services?
Yeah, I think if someone wants to find out about more what I do, go to my Instagram. It's King of Debt on Instagram. Shoot me a follow and check out some of my story highlights. I have tons of free content. I also have a free course. It's 10 videos long. It's super comprehensive on building your personal credit, business credit. Great free course.
Yeah.
If anyone wants access to that free course, just shoot me a DM on Instagram, King of Debt, and just say close friends or free course. And then I'll just send you the access link to it.
Perfect. All right. Excellent. Thanks for being on the show, Jack. I appreciate your time. That was awesome.
Cool. Awesome, Scott. Thank you so much.